Fundamental principles and practices for bankers. Fundamental banking acts. There may be different reasons why a bank is in the verge of winding up. Most of those reasons may either be because of a failure to comply with banking regulations, to carry the business, or maybe because an arrangement by a court could not be worked out, or maybe because the bank's functioning seriously meddled with the interest of its depositors, or maybe because of the bank's inability to pay its debts. Winding up of a banking company is done on the basis of Banking Regulations Act 1949. The Banking Regulations Act 1949 deals with exercising of control over the management of banking companies, deals with regulation of banking companies, as well as thus suspension and winding up of banking companies. SARFAESI Act 2002, which is Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act. This is the act on the basis of which a financial corporation can retain the right to take possession of management of industrial concerns by fully realizing that the property of the concern is pledged, mortgaged, or hypothecated under law to the bank or to the financial corporation. The provisions of the SARFAESI Act 2002 can be practical while taking possession of hypothecated goods to the bank, and the bank can sell them without the intervention of court after observing the required formalities. In the case of hypothecation and pledge, the title to the goods is not transferred to the bank, who is usually making the advance to the interested party. Another act of significance to the bank is the Negotiable Instruments Act 1881, which defines the holder in due course as a person who is the possessor of the negotiable instrument for consideration or is a holder of a negotiable instrument. As per the provisions of this act, a payee of the check may face a criminal action if the check is bounced or is returned because of insufficient funds. Also, there are circumstances in which, even though there exists sufficient and adequate funds in the bank account, checks are returned because of the fact that the payment may be stopped on that account, or because of the fact that the balances in account are not clear balances for payment, or because of the fact that the funds are attached by a garnishee order because the amount is payable from that account or are set off by the bank. The sole authority of the Reserve Bank of India is to issue coins or currency notes of denominations in currency notes of rupees 2 and above is according to the Reserve Bank of India Act 1934. The FEMA Act or Foreign Exchange Management Act 1999 was enacted to restrict, regulate and prohibit any lending or borrowing between residents in India. Home loans. The ability of a commercial bank based on excess cash and liquidity position increases its loans and investment opportunities. The Rural Infrastructure Development Fund or RIDF is managed by NABARD or the National Bank for Agricultural and Rural Development, and the limits that is placed on housing loans for repairing worn out houses is fixed at rupees 2 lakh for rural and semi-urban areas as opposed to rupees 5 lakhs of rupees for urban areas. Direct finance to the home sector up to rupees 20 lakh is treated as part of priority sector lending in the servicing of finance in the housing sector. Charging securities. The type of charge created on intangible securities like accounting receivables is considered assignment in banking parlance. Banks can give advances to the employee for purchase of shares under an employee stock exchange plan to the tune of rupees 20 lakhs only. Banks finance book debts by cash credit that is against pledge of book debts. In a mortgage, there is a transfer of interest in the property to the creditor, but in hypothecation, there is only obligation to repay money and no transfer of interest. The limitation period for filing of a suit on a property that is mortgaged from the date of debt becomes due in mostly 12 years time span or passage of time. Marketing Information System or MIS. Generally, when one talks about marketing information system, it is the meaning, features, functions, and advantages that mark a good marketing information capable, made available, and made usable in a bank. Meaning of MIS may make the system provide information for marketing decision makers in such a way it improves their marketing plan, including its execution and control. Features of MIS does not stop short of creation of a master plan for the bank's information flow. It may also expand on coordination functions amongst specialists and executives, prevention and solution of marketing problems, as well as future orientation for any anticipatory remarks. Function of MIS is to collect and assemble data and also to aid in analyzing, processing, storage, and dissemination of information. Advantages of MIS may result in better customer relationship and can give total knowledge, including its mechanism of knowledge flow wherever required. Customer service is also improved owed to data sharing and minimization of conflicts as a result of knowledge sharing. EFT systems. The different methods used for data transmission for communication may be based on full duplex or simultaneous two-way transmissions, half duplex or movement of data in two directions, as well as simplex, which is transmission of data in one direction. Digital images are required for integrity, authenticity, and non-repudiation. As per the Information Technology Act of 2000, the importance laid on electronic transmission of messages has gone way beyond expectation, especially in the e-commerce sector. IndoNet is a countrywide network having hosts in Hyderabad metro centers and access points at Pune, Visakhapatnam, Bangalore, and Ahmedabad. Providing a gateway to iNet, it helps in achieving an expansive spread all across India and also excels in its connectivity to the international systems. SWIFT is a system which is made with an objective of creating transactions that span internationally and make gains in transmissions in the ascending telecommunications and requirements of the banking industry. NICNet is a wide area network that provides communications with the satellites and operates VSAT terminals whose access is gained based on leased lines and dial-up connectivity. Also, the role of technology upgradation is happening in banks through its use of websites, which marks new avenues to market its products and services, including providing electronic financial advising and dissemination of information. Non-performing asset or NPA. Non-performing assets or NPA are those which are overdue by 2 harvest seasons on advances made for cultivation, which are overdue for 90 days in interest and installment of a term loan, or those that are out of order for more than 90 days, including overdraft, bills discounted and purchased, as well as cash credit or hypothecation. An NPA is an advance made by the bank on an account where the installment and interest on principal is due for more than 90 days in the case of a term loan, and also where the account remains out of order for a period of more than 90 days. An account should be treated as out of order if the outstanding balance is well above drawing limits or sanctioned limits, and if it is below with no credits continuously for 90 days, is also treated likewise while considering the accounts around non-performing asset. Non-performing asset or NPA may occur in the case of stock statements, bills purchased and discounted, as well as in the case of loans granted for short-term crops. In the case of stock statements where the working capital is provided by banks, and if the outstanding in the account on the basis of drawing power calculated from stock statement is older than 3 months, NPA is bound to occur. In the case of bills purchased or discounted for more than 90 days, the total of all the advance account of borrower is taken as an NPA. In the case of loans provided for short-term crops, if the installment of principal or interest is overdue by 2 crop seasons, the loan granted becomes a non-performing asset. Non-performing asset normally is classified as a standard asset, substandard asset, doubtful asset, and loss asset. In the case a loan is sanctioned by the bank to a borrower who submits fake documents, such a loan is treated as a loss asset. A borrower account is an account which is overdue by 15 months, is classified as a substandard asset. In the case of a personal loan where the default in payment is more than 90 days, the account is termed as a loss asset. Generally, a bank makes provision for 100% of unsecured portion of a doubtful asset, but if it is in doubtful category for less than a year, bank make provisions for 20% on the amount of advance secured. Documentation and compliance. An application form made to the bank is quite unlike a hypothecation agreement or a term loan agreement because an application made to the bank may be for creation of registered mortgages or may be based upon the application made. The bank may arrange for an advance to limited companies against their assets. For creation of registered mortgages, deed should be with the registrar of assurance within 4 months from the execution date. For cases where bank makes an advance to the limited companies based on their assets, form should be with registrar of companies within 30 days from the execution date. One is also expected to remain knowledgeable of these facts in the common banking dialect. RBI is known as a lender of last resort. AMFI or Association of Mutual Funds in India is not a regulator, whereas RBI, SEBI, Securities Exchange Board of India, and IRDA, Insurance Regulatory and Development Authority, are regulators. IRDA regulates all forms of regulatory business. Urban Cooperative Bank is controlled by state governments and RBI.